Hey puppy trades, I want to do a video analysis update of the stock market. We'll talk about big tech like Apple, as well as the NASDAQ, advanced market devices, and Nvidia. We'll talk about the S&P 500, as well as oil stocks, uranium, industrials, and financials. We'll talk about AMC theaters and Boeing, as well as Virgin Galactic, DraftKings, and the Palladium ETF. We'll talk about Netflix, Salesforce, TWLO, Fastly, Palantir, Tesla, Enphase Energy, NIO, Xpeng, Li Auto, Bitcoin, and Ethereum. So let's get right into it. We have Apple forming a wave 1 and a wave 2. Then it goes on a large wave 3 that is subdivided into 1, 2, 3, 4, 5 waves. So this is a wave 3. Now we are ending wave 4 at the 38.2% retracement of wave 3. We're looking for a wave 5 to be at least the length of wave 1 placed at the wave 4 low. So generally wave 4 retest, but doesn't break, doesn't close below the wave 1 high. So if Apple's above 135 to 137, bulls pretty confidently will look for a wave 5 to be at least the length of wave 1 placed at the wave 4 lows. So I say at least because when you zoom out to the larger degree, Apple begins a new cycle on the September 2020 quad witching date, and it goes on a wave 1 and a wave 2. So the wave 3 target is the 161.8% extension of wave 1, which is 171. From there, I'd expect a shallow wave 4 before a wave 5 higher. So I think Apple's going to hold above 135 to 137 and go on a wave 5 of wave 3 that will at least take Apple to 162, but more realistically will take Apple all the way to the larger degree target of 171. We'll have a shallow wave 4 correction and we'll go on a wave 5 higher. So how would that look on QQQ? Well, the NASDAQ looks really pretty right here. It has a wave 1 and an ABC correction putting in wave 2. It then has a huge wave 3, which we predict that goes past the 161.8% extension of wave 1. Now it's putting in wave 4 right now, kissing the 38.2% retracement of wave 3. So this is wave 1 and wave 2. This is wave 3. Wave 4 is retesting the wave 1 high. So we'll use the wave 1 high of 342 as the invalidation. We'll use the 50% retracement of 349 as the stop. I expect the Qs hold above both of those levels and go on a wave 5 higher that takes the NASDAQ up to 402. And that could happen around, late November, early December. We wake up in a market where the NASDAQ is at 400. And that's something to think about when you have the idea of a seasonal, quad witching September bearish period before a very bullish run that generally will happen in October, November, and December. So I don't trade seasonality, but that's kind of what the charts are pointing to right now. If we look at Nvidia, we can see that this is a wave 1 and a wave 2, then a big wave 3 and a wave 4 that pulls back to the 38.2% retracement of wave 3. I came out that day, I said that's wave 4. We're going to go on a wave 5 that will be at least the length of wave 1 placed at the wave 4 low. We hit that target, but I still believe that we're within a wave 5 higher right now. This is wave 1 of wave 5 and wave 2 of wave 5. This is wave 3 of wave 5 and wave 4 of wave 5. So wave 5 of wave 5 will take Nvidia up to 240, and that's a big deal because we'd be ending 1, 2, 3, 4, 5 waves on the smaller degree. We'd also be ending 1, 2, 3, 4, 5 waves on the larger degree. So I kind of mapped out what a correction for Nvidia might look like on the larger degree, and it's not really that bad. I think Nvidia forms a wave 1 from the March 2020 low to the February 2021 high. That's all wave 1. This is wave 2. We'll end wave 3 on this next thrust above 240. So this will be wave 1 and wave 2. Above 240 will end wave 3. Then I would think Nvidia goes on a sideways and shallow wave 4 before it goes on a wave 5 higher. And basically all these instances, I'm looking for a correction, but I'm not looking for a crash. I'm looking for a shallow and sideways price period, very similar to how Nvidia was shallow and sideways during this consolidation period before it went on the next leg higher. I think it would be more of the same. We'd have consolidation and sideways price action before we went on the next thrust higher for Nvidia in the bigger picture. Here's advanced market devices. I think, a big theme of the fourth quarter is will laggard semiconductors like Micron and Intel and Qualcomm and Taiwan Semiconductors, will they get some money from Nvidia? I think AMD is kind of already starting to. On the larger degree, we have this beautiful count that we've really had in mind since June, that this was a wave 1 and a wave 2. This was a huge wave 3 and a wave 4 that ended at the 38.2% retracement. So if we took the length of wave 3, we placed it at the wave 4 low, then we should have seen advanced market devices go up to 136, 137. We're getting close to that right now. We got close to that on that pop, but this is a wave 1, 2, 3, and 4 from this low that we form in May. So we got to figure out what is this. This is clearly, in my opinion, a 1, 2, 3, 4, 5 waves impulse, and we're right around the 50% retracement. So What happens if AMD is at 98? Well, then it would be at the 61.8% retracement. We'd probably have to call this a nest. That would say that this is another 1 and another 2. We're going to enter an explosive wave 3 of wave 3. The general expectation is the same. We're looking for a wave, this rally to get replicated in time and price and take AMD to 138. But in this scenario, that wouldn't be the top. We'd have a shallow and sideways wave 4 before we went on a wave 5 higher. So that's the very aggressive view. We don't even need to take the aggressive view right now, but if we saw AMD, below 98, that would be the only view to take, to be honest. So let's look at the more conservative view. The more conservative view of AMD says that this is a wave 1 and this is a wave 2, this is a wave 3, and this is a wave 4 that is ending at the 50% retracement of wave 3, and a wave 4 that is retesting the wave 1 high. So we'll go on a wave 5 that will be the length of wave 3 placed at the wave 4 low. We're still looking for a run to 136, 138, towards the end of the first quarter, but in this scenario, that would be the end of wave 5. So I still think that AMD will hold. We'll call 92 the invalidation because it's the 78.6% retracement. We'll call the stop level this wave 1 high of 95. I think that AMD holds above both of those levels and goes on the next thrust higher into the mid 130s towards the end of the first quarter. So that's advanced market devices. Here is the S&P 500 SPY. We'll talk about SPY right now. SPY forms a 1, 2, 3, 4, 5 large degree wave 1 during this rally from the March low to the September high. It then pulls back and puts in a wave 2 low right around the September 2020 quad witching day. Wait, so a bearish September before a very bullish period that a lot of people missed. Oh, that sounds familiar. But anyway, this is a wave 1 and a wave 2. It's a wave 1 that is subdivided into 1, 2, 3, 4, 5 waves. We then have an ABC correction that puts in wave 2. So I've been saying since the election, we're going to go on a wave 3. There will be at least the length of wave 1 placed at the wave 2 low, and that would take the S&P 500 SPY to around 460. So I believe we're still within this large black wave 3. A lot of wave theorists, they really want to say wave 3 ended right here. I think we're still within wave 3 right now. This is wave 1 of wave 3 and wave 2 of wave 3. So this is wave 3 of wave 3 and wave 4 of wave 3. Let's focus on the smaller degree right now. If this is a large degree wave 3 in process, this is wave 1 of wave 3, wave 2 of wave 3, wave 3 of wave 3, and wave 4 of wave 3. So the fibs for wave 4, the 50% retracement is the invalidation level. That's around 413 for SPY. The buy zone is between the 23.6 and the 38.2% retracement, which is between 422 to 434. That's exactly where we are right now. We're expecting that the S&P 500 will go on a wave 5 higher. There will be at least the length of wave 1 placed at the wave 4 low. That would take SPY as high as 500, and that could happen by the end of the first quarter of 2022. So it could look very similar to this, that this is a wave 1 and a wave 2, and just like the NASDAQ, we're within a large degree wave 3, and we're within a smaller degree wave 5 of wave 3 that we're about to begin. So while the Qs are running the 400, let's see at the S&P 500, how far it goes. Okay, I think the S&P 500 could go all the way up to 500 towards the end of the first quarter to complete 1, 2, wave 3 from the March 2020 low. Then we would expect a shallow and sideways wave 4 period before a wave 5 higher. But I think the most important thing right now isn't this larger degree count. It's the smaller degree count from this low that we form right around the election. This is a wave 1 and a wave 2. This is a wave 3 and a wave 4. So we've got about 413 as the invalidation and stop level. 422 might be a lot tighter. And then we're going to go on a wave 5. There'll be at least the length of wave 1 placed at the wave 4 low. In 4, 5, 6 months, we could see the S&P 500 near 500. And that lines up with kind of a lot of, stocks and tickers that we've talked about. Let's look at the oil ETF. We actually predicted, a lot of this big move. We said in September, when we saw all these uranium stocks exploding, we were like, let's look at these oil stocks. I think they're about to do the same thing. That's called playing follow the leader. So September is a quad witching month. It's a quarterly month where large institutions will rebalance their portfolios before they get ready for the next quarter. So we saw that uranium stocks looked like they were getting a lot of rotation. We were looking for the oil stocks to kind of follow in the energy sector, and that's happened. So XOP goes on a wave 1 and a wave 2, has a huge wave 3 that passes the 161.8% extension of wave 1, and then just right out of the textbook, wave 4, retest the wave 1 high, and we go on a wave 5 that's going to be the length of wave 1 placed at the wave 4 low. It's basically written in the sand that XOP is going to 114. I know because we predicted this move, okay? So it's the very same idea with XLF and XLI. If XOP is going to 114 at least, the stock market probably won't crash during that time, right? The uranium ETF, I just wanted to touch on, we mentioned it, how it was kind of a leading indicator. URA is an ETF full of uranium stocks. It forms a wave 1 and a wave 2. It had this big wave 3 and wave 4, with the rest of the kind of industrial sector. And then it acted as a leading indicator by exploding above the wave 3 high during the quad witching month, confirming more upside. I think that URA is within at least a wave 5 that will take it up to 30. URA is going to 30, right? And XOP is going to 114. It's unlikely that the stock market will crash during that time. Very similar with XLF and XLI. XLI is looking really pretty right here. So we've seen XOP break out. We've seen the uranium stocks break out. Now we'll look for XLI. Will this kind of sector within the industrials and the banks and the tanks start to break out? The banks, by the way, look incredible. But anyway, this is XLI. It's a wave 1 and a wave 2, a huge wave 3, and an ABC correction that's ending wave 4 right now around the 30, literally at the 38.2% retracement. This is where a wave 4 is supposed to end. So pretty tight. The 50% retracement is 95. That's not far away, but I do think XLI holds above 95 and goes on a wave 5 higher. That's at least the length of wave 1, placed at the wave 4 low. So XLF, the invalidation level for XLF is 34.90. We'll look at that in a second. We're not even close to that level. So, 95 is pretty tight. I'm really trading XLF and XLI together, but I think both of them are looking like a wave 5 higher is about to happen. This is wave 1 and wave 2, wave 3 and wave 4. The length of wave 1 placed at the wave 4 low says in the next couple of months, 1 or 2 months, we should see this wave 5 to 113, 114 take place for XLI. If we're being really tight, XLI won't go below 95. Let's look at XLF right now. Man, this is looking good. If you just looked at XLF and Tesla, you would have no clue that we had a red September. But anyway, this is a wave 1 and a wave 2. This is a wave 3 and a wave 4 that ended at the 38.2% retracement. So we said we're within a wave 5 that will be at least the length of wave 1 placed at the wave 4 low. And that gives a wave 5 target of at least 43 for XLF. So we're within a large wave 5 right now. It looks like this is wave 1 of wave 5, and this is wave 2 of wave 5. So XLF, to be quite frank, looks like it's going to hold above 36, definitely hold above 34, and explode into a wave 3, 4, and 5 of wave 5 that will at least take XLF to 43. Around that time, we should see that XOP is going to 114 and XLI is going to 113, 114 as well. So I'm looking for the banks and the tanks to rally together. We're starting to see oil and the banks and the financials start to separate themselves from the rest of the market, and that's no surprise as we've seen this quad witching date cause some changes in the market. I think one of these changes is going to be a rotation into the meme stocks. Let's just look at the AMC chart for a little bit. So this high is put right around that June quad witching date. Anyway, this is a wave 1 and a wave 2, a huge wave 3 and a wave 4. So wave 4 ended when the length of wave A placed at the wave B high is exactly where wave C ended. So this is wave 1 and wave 2, this is a wave 3, and now a wave 4 that's ending at the 61.8% retracement. So what this definitely could be is another nest. This could be another wave 1 and another wave 2, and the implications would be ridiculous. I mean, it would literally be ridiculous, but we don't even need to make that argument right now. We can talk about the more conservative view for AMC Theaters, which I talk about because it's a meme stock. I also talk about it because it's a reopening stock. So it actually is important to know where this is going. This is a wave 1 and a wave 2, a huge wave 3. Now an ABC correction is ending wave 4 right around the 61.8% retracement. So I think we've begun a large wave 5 right now. This is wave 1 of wave 5 and wave 2 of wave 5. We'll see waves 3, 4, and 5 of wave 5 at least take AMC above a new high of 72. So we saw a little bit of a pop today from AMC. We'll see if that's a sustained, kind of rally into October. But anyway, it looks like from this low, bulls have a pretty comfortable, place to trade against 98. If we're above 28, sorry, not 98, then this is wave 1 and wave 2. We'll have a wave 3, 4, and wave 5 take AMC above this wave 3 high of 72. Let's talk about Boeing right now, another reopening stock, as an aerospace defense stock as well. This is Boeing on the largest degree. You know, it's a gorgeous one. It's a 1, 2, 3, 4, 5 large degree wave 1, and ABC correction is ending a large degree wave 2. That's why I've always kind of thought Boeing's one of those that, you know, you might be a little more leeway with, but that's just my unprofessional opinion. Anyway, Boeing, they do make all the airplanes, guys. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2. So we've had Boeing holding above 191 being a very important level for a while, and we haven't gone below 191. I think that's because Boeing is within wave 3 of wave 3 right now. The wave 3 target is 307. We'll have a shallow wave 4 correction. We'll go on a wave 5 higher. We talk about XLI and, you know, the oil stocks and all these stocks that are looking ready for a nice thrust into the fourth quarter. I think we're going to see Boeing get up to 300, 307, have a shallow wave 4 correction and go on a wave 5 higher. The industrials are looking good. You know, if the whole theme of, you know, the banks and the tanks getting money in the fourth quarter, you know, continues to play out, then Boeing will do great. It'll go to at least 300, 307. I don't think it's going to go below 191 in the meanwhile. Here is Virgin Galactic, ticker symbol SPCE. There's a lot of ETFs that this trades in. It's a growth stock, it's a meme stock, it's an aerospace stock, but it's a really nice wave count. It's a 1, 2, 3, 4, 5 large degree wave 1, and ABC correction put in a large degree wave 2 right around the 78.6% retracement. So I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. We're going to enter an explosive wave 3 of wave 3, wave 4 and wave 5, and we're going to look for Virgin Galactic to go all the way up to 65 before a shallow wave 4 and a wave 5 higher. So I'm looking for, in the first half of 2022, that just this little rally has been replicated, and just this rally getting replicated would take Virgin Galactic on a wave 3 higher to 65. So this is a wave 1. This is an ABC correction ending wave 2 right around the 78.6% retracement. We just changed quarters. Space is all over the bar chart, straddle and strangle screener with a lot of meme stocks. I think it's getting ready for some explosive fireworks. I think AMC, I think Space, I think GameStop, you know, even some of the pot stocks, they're getting ready for a rally that we're all going to be staring at some point in the fourth quarter. I'm quite sure of that. If we look at Space right now, this is a wave 1 and a wave 2. So just the length of wave 1 placed at the wave 2 low gives a pretty, you know, reliable, pretty conservative wave 3 target of 65. Right now, bulls can kind of trade against that low of 14. That's a little wide. I think 21 is a little tighter, but I think we hold above 21, and we're going to go on a wave 3 of wave 3 that takes Space at least to 65. So it's looking good. I want to talk about DraftKings right now. Just from this low is the count we'll focus on. I think DraftKings forms a wave 1, and ABC correction puts in a wave 2, and now DraftKings has another wave 1 and another wave 2, ending right around the 78.6 to 61.8% retracement. So it's pretty clear for DraftKings, at least as far as invalidation levels go. We want to see 42 not get broken, and we definitely don't want to see 41 get broken, but I don't think that DraftKings will go below, that's the low of 39. I don't think DraftKings will go below 39 or that it will go below 42. I think it holds above both of these levels, and this ends up being a wave 1 and a wave 2. This is another wave 1 and another wave 2. So the length of wave 1 placed at the wave 2 low gives a minimum wave 3 target of 70. This is kind of that fourth quarter target, shallow wave 4 correction, and then a wave 5 higher would take DraftKings all the way up to, you know, 88, as high as 90. You know, I think that would be more of the first half of 2022. We're looking for that, but this is a pretty nice setup right here. A wave 1 and a wave 2, you know, trading against that low of 42, looking for DraftKings to go all the way to 70 for wave 3. I like that, but anyway, that's DraftKings. I wanted to touch on it. It's got a lot of upside if it's above 42. The Palladium ETF, this is a very interesting chart for me. Let's talk about the, we'll go to the Palladium ETF that is issued by the funds management. So this kind of just has all the, you know, stuff about what's in this fund, how much palladium they hold. There's 2 points I wanted to point out. Okay, so this is for the ticker symbol PALL. It's a palladium ETF that tracks the palladium spot price by holding physical palladium. Anyway, there's 2 notes that I wanted to talk about. from kind of the ETF report that the fund gives. Okay, the first is that the 10-year correlation for Palladium to the S&P 500 is about 45%. So it's not heavily correlated with the S&P 500. And in fact, when we look at the Palladium chart in a second, we'll see that while the market crashed in 2018, the Palladium actually was in a bull market. So they moved together generally over time, just not at the same time. So I wanted to point out that nice diversification piece, but also this that I thought was interesting. So a change in economic conditions, such as a recession, can adversely affect the price of palladium. So a recession would cause palladium to go down. It says palladium is used in a wide range of industrial applications like an economic, so because of this, an economic downturn could have a negative impact on its demand and consequently the price of its shares. So I thought that was pretty interesting because they're saying that a recession would cause palladium to go down heavily because it's a very industrial metal. Well, this is really interesting because palladium forms a wave 1, 2, 3, 4, 5 that completes a large degree wave 1 from this low in March of 2020. So this is a 1, 2, 3, 4, 5 waves impulse that completes a large degree wave 1. Now we are ending an ABC correction right around the 78.6 to 61.8% retracement. So pretty tight. We're above 168 with the invalidation level of 137 being this low from March 2020. We'd expect a huge wave 3 that would be at least the length of wave 1 placed at the wave 2 low. That means that around a year and a half, we should see this palladium ETF, right? This tracks the value of a rock, go from 178 to 314 for this wave 3 target. And that would just be wave 3. We then have a shallow wave 4 correction and a wave 5 higher, taking palladium as high as 420, 425 years down the road. But remember what we just read from the ETF report is that palladium will go down if there's a recession. What we're looking at right now is the idea that there's going to be a huge, palladium is not going to go down, right? So if a recession is going to cause palladium to go down, then an economic boom is probably what's going to, quote unquote, cause this huge wave 3 that's going to be at least the length of wave 1 placed at the wave 2 low. So palladium is kind of also giving the idea that the economy is going to do a lot better than people think. So anyway, palladium, I think it's going to hold above 168 and go all the way to the next wave 3 target, which is up in the 300s, and then eventually the 400s for wave 5. So it's very unlikely that the economy has a major crash during that time, which I think is pretty cool. So anyway, this is a wave 1 for Netflix that is cleanly subdivided into 1, 2, 3, 4, 5 waves. We have an ABC correction in wave 2 right around the 61.8% retracement, and then Netflix does exactly what I say it's going to do from this level. So from this level, from early August, I said Netflix will go on a huge wave 3 that passes the 161.8% extension. It will pull back to the 38.2% retracement of wave 3 and then go on a wave 5 higher, right? And that's all happened to the T, right? These are Elliott wave principles. That's because the market is run by computer algorithms, okay? It's not run by you and your cousins, trading shares of Apple. People are like, who's buying SPY up here? Robots, dude, not anyone that you know. This is a wave 1 and a wave 2. This is a huge wave 3 and a wave 4 that retests the wave 1 high. So the length of wave 1 placed at the wave 4 low will take Netflix to 646. I mean, Netflix had this massive, what is this, a 14-month breakout? Right, this is a 14-month breakout, huge breakout for Netflix, breaking above the high from July of 2020, right? That's got to impact your analysis, but for a lot of people, it's not even registering because they just stare at the S&P 500 all day. Another huge piece of evidence that bulls got in September, right? September, the rotation month, we have Salesforce going on a wave 1 and a wave 2, having a huge wave 3 impulse, and then the perfect wave 4 that hits the 50% retracement and retests the wave 1 high. Then we break above the wave 3 high to confirm a wave 5 in progress. The length of wave 3 placed at the wave 4 low will take Salesforce all the way to 367, looking very good for the software sector. What I'm hinting at right now is that Netflix and Salesforce are leading indicators that the software sector is going to be a place to find alpha in the fourth quarter and also in the first quarter. TWLO, I just want to focus on the short-term count. I still think it looks good. TWLO forms a 1, 2, 3, 4, 5 large wave 1 from this low that it forms in May of 2021. So basically every growth stock, it's the May low. This is a wave 1 and an ABC correction ending wave 2 right now for TWLO. We're between the 61.8 to 78.6% retracement. So pretty tight. The 78.6% retracement is 304 is the stop. The wave 1 low is 275. So that's the invalidation. I think TWLO holds above both of those levels and begins a pretty big rally. And we look at the larger degree count, we'll see that the next kind of minimum target for TWLO is 500. I think 500 gets reached in the first quarter of 2022, and that this ends up being a wave 1 and a wave 2. So we'll hold above 275. We'll hold above 304. We're going to go wave 1, wave 2, and then wave 3 will at least take TWLO up to 500. We'll have a shallow wave 4 correction and then go on a wave 5 up into the 600s later into 2022. TWLO looks really good, especially if it's above 275. Here's Fastly. Fastly, I've talked about Fastly just being the idea. People say they want to buy Microsoft and Amazon and, Nvidia, when they're really early. And it's like, okay, you're not going to buy any of those stocks without taking the chance. Okay. And everyone talks about, well, if I bought big tech in the early 2000s, what if I bought yahoo.com? It's like, that's why you diversify a little bit. I don't think this is yahoo.com. I think it's a lot closer to Microsoft, okay? This is a 1, 2, 3, 4, 5, wave 1, and an A, B, C correction, large wave 2. So the length of wave A places the wave B high is exactly where this wave C is ending. It's exactly where this wave 2 is ending, and we kiss the 78.6% retracement on the weekly candle, and it looks like we put in wave 2 on that date. So if Fastly's above 33, I mean, this is a monster, right? Do you remember in 2020 when people were like, what in the world? Fastly's up, 50 or 60% in a week, right? And then now we're all asleep on Fastly. This is a 1, 2, 3, 4, 5, large wave 1, and ABC correction ends wave 2. I mean, there's not a better risk reward trade than this. If Fastly's above 33, throw your laptop, into the ocean and join the Peace Corps. Don't look at your trading account for 2, 3, 4 years, because you're probably going to wake up in 2025 with a monster, and that's definitely not investment advice, but that's how I view Fastly. That's wave 1 and wave 2. The length of wave 1 places the wave 2 low says, the long-term cycles says 160, is selling early, okay? So that's Fastly. Here's Palantir. Palantir's looking good. It broke above this small degree wave 1 high. We'll focus on the small degree right now. So that's this count from May 11th, right? May 11th, May 12th, May 13th. I can almost assure you if it's a growth stock, that's when they put in the low. For Palantir, this is the wave 1 and this is the wave 2. We're then a wave 3 right now that's going to go all the way up to 33 at least, because that's the 161.8% extension of wave 1. And then we'd expect a shallow, untradeable wave 4 before a wave 5 up to 42, up to possibly 52 in the fourth quarter, in early into 2022. But Palantir's looking good. It broke the wave 1 high. All I really wanted to do with Palantir was measure these Fibonacci retracements. And it looks like right now, it's going to be a little messy, but it looks like we're ending this kind of, small correction right now, right around the 50 to 61.8% retracement of this, small little wave. So I'll get a little nitty gritty right now. I think Palantir looks kind of something like this. It's within a wave 3. This is wave 1 of wave 3, and we're ending right now at wave 2 of wave 3. So we're about to enter wave 3 of wave 3. That's where we're going to see Palantir, in my opinion, go on this explosive run into the 30s, eventually even into the 40s. So we're within a wave 3 right now on the larger degree in blue. I think on the smaller degree, these small black numbers, this is wave 1 and wave 2. We're going to enter wave 3 of wave 3, go up to 33, have a shallow wave 4 correction and a wave 5 higher. Palantir looking good. A lot of the software names are looking really good. Let's transition into clean energy. Tesla has been green for most of September. Now it is broken above this wave 1 high of 780. So, as a wave theorist, you don't say a bunch of, nonsense like it was rejected at supply, okay? When Salesforce and Netflix break out to a 14-month high and then pull back, you don't say that they were rejected at supply, okay? The only reason I say that is because people will look at Salesforce or Netflix breaking out to 14-month highs and then pulling back to retest the high, and they'll be like, oh, it was rejected. It's like, what are you talking about? But anyway, Tesla on the larger degree is gorgeous. It's a wave 1 and a wave 2, a huge wave 3. Then a wave 4 that pulls back to the 38.2% retracement. We put in wave 4. We're then a wave 5 higher right now. It sounds crazy, but it's conservative. This is a wave 5 in progress. The length of wave 3, place of the wave 4 low, says that Tesla eventually is going to get to 1,370. I'm looking for that to happen early into 2022, particularly the first quarter of 2022. We're getting off to a good start. I think Tesla could get very hot in the fourth quarter. Okay, Tesla could get very hot in the fourth quarter. Here's why. This looks like it's a wave 1 and a wave 2 from this low that it formed in early March. That's wave 1 and wave 2. We broke above this wave 1 high to very recently. So that confirmed from an Elliott wave perspective that Tesla is within a wave 3 right now. So this wave 1, wave 2, we're looking for waves 3, 4, and 5 to take Tesla up to that larger degree wave 5 target, which is 1,368. So that's the larger degree wave 5 destination is about 1370. The path is how we're going to get there. I think the path is that this is all a huge wave 5. This is wave 1 of wave 5 and wave 2 of wave 5. Tesla's in wave 3 of wave 5 right now. So waves 3, 4, and 5 of wave 5 will take Tesla into the 1360 range. So it's looking very good for Tesla. It's looking very good for Enphase Energy. I like this one a lot. It's a pretty clear count just from this high that we form in early February with a lot of growth stocks. We have an ABC correction. Now we have an impulse that's formed from this May 10th low, this May 11th to May 10th low. It's basically every growth chart is the same. It's a high in early February, a low in May, and then you just got to see which ones haven't broken that February high yet. This is a wave 1 impulse from this May low that is cleanly subdivided into 1, 2, 3, 4, 5 waves. So that's all wave 1. Now we're pulling back to the 50 to 61.8% retracement. I think that this is a place, this is the buy zone for Enphase Energy. That's a technical term, not an investment recommendation. That's the buy zone is the 50% to 61.8% retracement of wave 1 is where wave 2 ends. Then the length of wave 1, place of the wave 2 low, gives a wave 3 target of 240. We'll see a shallow wave 4 correction and then a wave 5 higher. So I think Enphase Energy looks really good. The stop is the 78.6% retracement of 128. The invalidation level is 108, but I really think 128, we'll trade above that, and then the length of wave 1, place of the wave 2 low, gives a minimum wave 3 target of about 240. Then we have a shallow wave 4 correction. We go on a wave 5 higher, so I think, we could see 240, in the first half of 2022 if we get this clean energy rotation going. I think Enphase Energy has a lot of upside, and that 128 is a great level to trade against. NIO, Xpeng, and Li Auto, the Chinese EV, I like this a lot. If we look at NIO right now, the smallest degree count is the most important one. We have an ABC correction from this high in early January. Then we form a wave 1 and an ABC correction. We're putting in wave 2 right now at the 78.6% retracement. So it's kind of like, we just got to figure out for NIO, are you going to break below 30.71 or not? Okay, I don't think you will. And if you don't break below 30.71, then this is a wave 1 and this is a wave 2. NIO's going to have an explosive wave 3 that will take it all the way up to the 161.8% extension of wave 1, which is up there at 70. So this is what I'm looking for NIO, that it's not going to go below 30 and that it's going to follow Tesla and have a huge impulse. We'll see Tesla and we'll see NIO kind of rally together. And then the next destination for NIO is the 161.8% extension of wave 1, which is around 70. We'll have a shallow wave 4 correction and then potentially go even higher into the 90s. So I like NIO a lot. I'm looking for 70 to be reached towards the end of the year, towards the end of this quarter. If this is a wave 1 and an ABC correction putting in wave 2 at the 78.6% retracement, we should see an explosive wave 3 where NIO will hold above 30.71 and head up to 70. It's not going to go alone. It's going to go with Tesla. It's going to go with Xpeng. It's going to go with Li Auto as well. I mean, these two, they look pretty. I like them in the long term. That's how I've been using them. But this is a wave 1, an ABC correction puts in a wave 2, and then this is a monster wave 3 that's potentially begun. So, anyone hypothetically who got into Xpeng below 30, they might have bought a monster, and they probably don't realize how big of a monster it is yet. Okay, so I think that Xpeng has put in a very important, wave 2 low around 22, and it's within a large degree wave 3 where the next target is 80. Okay, this wave 3 is subdivided into 5 waves right now. This is wave 1 of wave 3 and wave 2 of wave 3. I think we're going to see XPEV enter wave 3 of wave 3 and start heading into, a new all-time high area. I like XPEV a lot in the long term. I think right now it's getting close with NIO and with Li Auto, which we'll cover in a second, for having a pretty explosive rally. So XPEV is looking good. I think that it's going to rally with NIO. It's going to rally with Li Auto, and these are looking very similar. For Li Auto, it's a wave 1, an ABC correction that's ended a wave 2, and then another wave 1, and now I think it's ending an ABC correction right now to put in wave 2. So I've, I was earlier into Li Auto, I was earlier into XPEV. I just wanted to update them, and I think that there are also a lot of evidence for NIO and for Tesla and for a lot of clean energy stocks in the longer term that these look very good. And I think that NIO, XPEV, and Li Auto, they're about to rally together with Chinese electric vehicles right now. But it looks right now like this is a wave 1 and an ABC correction ending wave 2 for Li Auto. We're going to enter wave 3 of wave 3 for these two names. I'm just going to continue to hold them. I got into them, when Li Auto was in the low 20s, and I think XPEV was in the mid 20s. So I'm just going to keep holding, but I think they're going to enter a wave 3 of wave 3, start heading towards those IPO highs. Bitcoin and Ethereum, I just want to focus on the small degree count right now. The small degree count for Bitcoin and Ethereum is pretty identical from this low. We most likely form a wave 1 and a wave 2. This is a wave 3 and a wave 4 for Bitcoin. So this is a wave 3 and an ABC correction that's ending wave 4. Right now, where the length of wave A places the wave B high is where wave C is ending. So that's that equal legs principle. So this is a wave 4 ending at exactly the 50% retracement. So we're expecting a wave 5 to be at least the length of wave 3 placed at the wave 4 low. We should see Bitcoin head into the mid 60K range. That should happen pretty conservatively in the fourth quarter. That this is a wave 1 and wave 2. This is a wave 3 and a wave 4 that's ending a little past the 50% retracement. So when a wave 4 goes a little past the 50% retracement, what could it be? It could be a nest. It could be that that's another wave 1 and another wave 2. And we're looking for Bitcoin to explode. And this could be it. This could be it right now, that Bitcoin's going to explode into a wave 3 of wave 3. And in that case, the mid 60K range is the minimum target. Okay. But the more conservative view is the one I'll take for now. The more conservative view of Bitcoin is that from this low, we form a 1, 2, 3. We're ending a wave 4 that is retesting the wave 1 high. We're going to go on a wave 5 higher that will very conservatively take Bitcoin into the mid 60K range. For invalidation levels, the 61.8% retracement is about 38K. That coincides nicely with the wave 1 high, which is around 36, 37K. Bulls want to be trading Bitcoin long above both of those levels, about 38 to 36.5K. And that's Bitcoin. We'll talk about Ethereum right now. It's almost identical, the exact same thing as Bitcoin. We have a 1, 2, 3 ABC correction ending wave 4 right now. So for both Bitcoin and Ethereum, that June low is going to invalidate the larger degree count. The larger degree count takes Bitcoin into the 90,000 range. It takes Ethereum into the 6,000, potentially even the 8,000 range. Both of those larger degree counts are invalidated if they lose the June lows, okay? Neither of them are really close to doing that right now, but within the smaller degree, I still think there's a nice setup in the short term for Ethereum and Bitcoin. For Ethereum, this is a 1 and a wave 2. This is a wave 3 and an ABC correction ending wave 4 right at the 61.8% retracement. So this conservatively is a wave 1 and a wave 2, a wave 3, and an ABC correction ending wave 4 at the 50% retracement. In that case, the length of wave 3 placed at the wave 4 low should take Ethereum up to about 4,900. 4,900 I think gets hit towards the end of the year. And yes, that could be conservative because yes, this could be an Elliott wave nest where that's not a wave 3, that's not a wave 4, it's another wave 1 and another wave 2. The expectation in the short term is the same. The length of wave 1 placed at the wave 2 low will take Ethereum to 4.9K into the end of the year, but under the nest count, that's going to be a very conservative target. We'll have a shallow wave 4 correction and we'll go on a wave 5 higher. I think Ethereum and Bitcoin both look good. I think Ethereum right now, we probably want to see this wave one high of 2,400 not get broken, and the 61.8% retracement of about 2,600 not get broken. And then even in the conservative view, that's a wave one and a wave two. This is a wave three and an ABC correction that's ending a wave four. A wave four that's retesting the wave one high will go on a wave five higher, and that's going to take Ethereum to around 5,000 towards the end of the year.